Hey, welcome everyone. Tom here, Park Avenue Trading, your chief dealer, keeping you sane in insane markets. It is 8:14 in the morning Eastern Standard Time on January 17th, 2025. TGIF. Thank God it's Friday, right? We made it through another week. Hope you caught some good pips from some of the advice that I put out there. I try to proffer up the best trading levels that I can. Yesterday was I looked at my video and I said, that in euro yen, I had a point that was really far away, but it was the only point that I had. It happened to be like 162, and I knew that was a far reach for euro yen, but in Forex anything can happen, so the point had to be talked about. So what's up today? Dollar yen hasn't completely broken down for me yet, and I'm not, I'm not in love with the bias of an upward movement. It's just not doing it. So the market's just not ready at this time to make a move upward. Seems to be consolidating a little bit, perhaps even attempting to grind, a little bit lower or shake people out. But the real important point in dollar yen is, well, like 154.50 is an important point. I think it could touch that, and that might shake everybody out, and the market may move up. Now, here's the thing. When I'm talking about bias, and that's a bias I have, okay, and where I'm getting it from is basically in my mind. Probably I'm reading into like a future event that hasn't really occurred yet. So that's a very dangerous thing. Trying to put geopolitical information with, economic fundamentals and like what's going to happen in the next few months. That doesn't exist. That future doesn't exist, and it's really all in my mind. So what I find myself, and what I try to prevent myself from doing, is actually stopping myself from looking for patterns that would confirm that bias. Patterns are just a great way to confirm what your internal bias is. If you're thinking up, you're looking for a bullish pattern, a wedge or whatever technical pattern that you're looking for. Okay. And that proves, like, that's kind of like the proof of your idea, and then all of a sudden you execute, and then you lose. So it's really important to have a price-based system to stop you from doing that. So that's what I have. I have a price-based system that prevents me from falling in love with any one of my mad ideas. But anyway, that's enough for that. Let's move on to what's going on in dollar yen. Right now, dollar yen, as it stands, it needs to hold above this 155.35 level, 155.36, in order to attempt to get to 156, the figure. Now, yesterday, I had this point right here. If you go back to the video, I think at 79, because that was like the resistance level I had, or 80. Like right there, I had the resistance level. Popped right into it perfectly. Now it's coming off from it a little bit, but it has to hold this 155.35 level. If dollar yen can get above, say, 156, unless there's, a huge amount of volume, it really, it's got resistance at, hang on a second here. It has resistance right at 156.36, right behind it. 156, let's go 156.40. Right there has a resistance level at 156.40. It needs to get through 156.40 in order to really show any type of strength to get back to like 157, the figure. It's not happening. Now, generally Fridays could be trend days. In other words, what is a trend day? Trend day is it starts at one extreme and it moves to the next extreme. It does it sometimes it moves straight away, or yeah. Taylor Douglas wrote a book many years ago, where he talks about there's three phases of the market. There's a buy day, there's a sell day, and there's a short sell day. And he said, like, the market repeats itself, but sometimes buy days can repeat themselves. Sometimes sell days can repeat themselves. So the 3-day sequence could be brought out over 5 days. It's very difficult to kind of decipher. But one thing that he said that was really cool, which I see, and you could probably see if you've been trading for a while, you've probably noticed this. Sometimes a market will open, let's say we had a down day, okay? Then all of a sudden the market opens, it goes slightly lower, and then boom, takes off and starts tracking higher, okay? Now, say the day it closes on the day higher, then the next day it closes up higher, and then the next day it closes up higher. So it had 3 buy days in a row. But however, on the first day of the reversal, the low was made first. It's really like an interesting phenomena that happens. Like the low is made first, and then the market takes off. And then, that pattern, that 3-day pattern that he talks about, you're supposed to go search for it, and it's nebulous at best. But there are some key points that he brings in that basically are really cool, and they really, you should pay attention to put in your trading arsenal. So if we break this 155.35, most likely we're heading back down towards the 150, say 5, the figure level. Wow. Now, what's below 155, the figure? So there's really an important point at 154.40. Okay, 154.40 is like kind of a really important pivot point, and I'll put it there as a ray. 154.40. Okay, 39 is close enough. 154.39. If that level breaks, we're going to like 153.95, something like that. That would basically start to signal that dollar yen, something's up with the dollar versus the yen, and the marketplace is looking to get into the yen. And that would mean that the crosses, the euro yen, sterling yen, should be really getting hit hard. So let's go on over to sterling dollar. Yesterday we had these levels in sterling dollar. Said that the marketplace basically had to hold this level 121.49 for the day, and the resistance at 122.92. I think it hit this first. It hasn't done anything yet here, but there's definitely resistance at 122.20 right now. 122.20. Did it do it already? It hit that? Sorry, 122.40. 122.40, not 20. 122.40. There's some resistance there right now. 122.40. It still has to hold this 121.58. If it breaks the 121.58, it's heading back down to the 121 figure level. Now, so far today, we only made it down to 121.60 so far. If it breaks the 48, it's heading down to 121 the figure, and then it's opening its way up to that 120.20 we've been talking about. Right now, it's kind of, the marketplace is kind of quiet. I think that the inauguration's coming up in the United States. The market's a little bit nervous about it, not so much because of the presidential election itself, but there's a lot of talk about potential terrorist attacks and stuff. So I think Wall Street, they're a little bit cognizant of that. They're kind of not committed one way. Like I said, Fridays are usually notoriously a trend day. They could start at any time, it could develop at any time. So that pivot point down here is a really important pivot point. 121.48 breaks that, going back down. Now, we need to get over 122.40, but there's resistance right at 122.90 right after it. So not really much happening except for sterling dollar still bearish, euro dollar still bearish. Let's get over to the cross. Yesterday we had the point at 190.28. Okay, it hit that. Today, if I look at sterling yen, we made a low at 189.32 this evening. Really interesting, because I was saying that we need to get it's opening its way up to 187. That was a little bit irrational exuberance. I had this point right here, 187.95. I'm really not that far off. Really, it's 188.06. So that's the point that it's targeting right now. It's moving towards it for sure. But well, not for sure. Okay, it's right now without a reversal above 190.28. We're gravitating to the 188.06. So sterling yen still bearish. Euro yen, same gizmo with this guy. These points are still good from yesterday. We had resistance at one. I don't know if I gave you this because this was when I calculated when I was trading yesterday. 160.56. That's still a good resistance point. It needs to get over 160.56 in order to attempt to 160.95. There's not much room there. Now, if it could get over 160.95, the first point's not, there's going to be some chopping around up in this area if it can make it. It'd be like right in here would be a lot of chop. And then it would need to really show some strength to get back up into this area. I don't really see that happening. I see more likely the scenario that euro yen is drifting, lower, just like sterling yen is drifting. Got the point at 157.57. I think that, I can move this up conservatively to, let's see, where are we? Euro yen, 158.50, I think would be right there, 158.51, something like that. That would be a good support level for it to kind of then consolidate and chop here. Still bearish, heading back down towards this level. Had a lot of trouble down here. There was a pop, but not much of a pop. So euro yen bearish. All right, so that about covers us for today. All your currencies in 12 minutes. Please, if you like what you see, make sure that you like and subscribe. Share the videos far and wide. I want to build a big trading community. Not only do I offer trading levels to trade off of, which are pretty damn accurate, I have to say. If I don't say it, nobody else is going to say it. So I got to say it. I got to hear it myself. But I try to offer some trading euphemisms. Like enjoy the party, but dance near the door, that type of thing. And also, I got a new one for you today. Not only do you not have to trade what you see, I think it's important for you to understand that when you're winning in the market, you ain't as good as you think you are. And when you're losing in the market, you're not as bad as you think you are. So that's the balance, right? Balance is like when you're winning, don't get so exuberant, because when the losses come, you're going to feel the pendulum swing the other way. You need to keep the pendulum in the middle, between the extremes, because you can go to, on the right side is completely confidence and rational exuberance. On the left side of the pendulum is despair. Keep the pendulum in the middle, which basically is just, it is what it is, right? It's not complete confidence and it's not despair. It's basically just being in the middle of the road. All right, so please head on over to Park Avenue Trading, get yourself a free ebook, and I'll see you over the weekend. I got a good lesson planned. I think I'm going to be talking about the open, and it's really important to discuss the open, because the close and the open, which generally are on a mirror image of each other, but not always, because sometimes the open has a gap up or a gap down, but it's very rare. It happens about 25% of the time, but generally market open and close is the same. But I think I'm going to talk about the open. All right, so I look forward to seeing you over the weekend, and please leave some comments for me. Give me the thumbs up. YouTube loves that, and we'll talk soon. Cheers.